All right, everybody, welcome back to the We Love Money podcast, brought to you by Alternative Finance. My name is Alex. I am a CFP, and I am joined here by Mr. John. How you doing, John?
Hello there. Feeling good. Let's talk about money.
Let's talk about money. So today we got 3 topics coming at you guys live, unrehearsed conversation about them. Topic number 1 is going to be, I am just starting out investing. What do you recommend for me? We are a beginner and we are just getting started. So we're going to talk about that. Topic number 2 is going to be, we're going to walk through the psychology of being in a trade. So you purchase a stock, it's going up and down. What's going through your head? That's going to be topic number 2. And then topic number 3, we're going to go ahead and get it over with, John. We're going to talk about AI.
No way. Really? For reals?
So John will not stop pestering me about AI, so we're going to go ahead and get it over with.
It's an important topic.
And we're going to talk about it.
Scary.
So without further ado, if that sounds interesting to you, sit back, relax, and here we go. So John, let's jump right into it here today, and let's jump onto our first topic, which is I've just started the idea of I want to invest. What do? I know nothing. I'm uncomfortable with this. What kind of advice do you have for somebody just starting out?
Well, for me, I was very blessed because I got to kind of join you on this journey from the beginning. So I was able to kind of lean on you and leverage you for advice and assistance. So my piece of advice is definitely at least try to speak to people who do this if you happen to know them. Maybe some of you do not, but I do recommend, picking the brains of people who do invest, or, doing the research of listening to podcasts like, big time players like Warren Buffett. There's multiple avenues of social media podcasts out there, and articles and companies that you can utilize to get started.
Absolutely. And that is kind of brings up a word that you and I have talked about a good little bit, which is immersing yourself into this space, right? So if you have never done this before, there's going to be a lot of scary things when you jump into it. There's going to be a lot of things, terminology you don't understand, concepts you don't understand, and you're dealing with your money. So it's going to be nerve-wracking. So before you really just jump in there and start throwing your money on the line, I totally agree that immersing yourself and engaging with people who, maybe are similarly passionate about doing this as you are, watching the news, watching markets, picking some stocks that you like and kind of keeping tabs on them, just kind of getting a feel for how these things go up and down, and really start to just immerse yourself in it if you can. I think that's definitely a great, great piece of advice for beginners. Yep. So, and I think that, I think that part of the challenge there kind of comes though from a lot of people, they don't necessarily know who in their circle even is into this stuff, right? I mean, at the end of the day, like, this is not something that people really talk about commonly. Like, I'll take you back to when I had my first job at my sales job, where I was sitting in my cubicle, placing my stock trades before I really became a financial advisor, and I was doing all that kind of stuff. I mean, I really was educating, immersing myself, and really doing it completely on my own. And nobody else around me really knew that I was doing that. I mean, occasionally the way that would come up is I would, spit out something random that I had picked up along the way, and that might cause somebody to either ask me a question or engage with me about what I'm talking about. And now I'm like, oh, this person might know a little bit something about this, and they might be able to actually have a constructive conversation with me about it. So that definitely comes along with immersing yourself in it. You won't be able to do that unless you have something to talk about, right?
100%. And again, like you said, it's not very common it's hard to find people that do it. You could have, family and friends that have been investing forever, but they don't talk about it. So you definitely have to try your best to leverage outside sources.
Yep. And I think another piece of great advice for people just starting out is to start small, right? I mean, like coming from a place where you're not just fully throwing your money in there into risky stocks. Like, start small, first of all, from the amount of money you put towards this, but then also from the standpoint of like the level of risk you're taking, depending on where you're at.
Yeah, 100%. And I even if it's something where, you're not really ready to throw your money out. Cause again, I remember even just watching my money leave my checking account and going somewhere else, that it was just very stressful and very, it's a lot.
Did I have sat with clients who are sweating opening
It's
their
sweating
account?
100%. Just doing that.
Their hands are shaking. They're like, I'm so nervous. And all they're doing is opening an account.
Exactly. It is terrifying. It's exciting and terrifying at the same time.
I mean, when they're asking you questions like, what's your social security number? What is your birth date? What is all this really, really personal information? I mean, that is scary, right?
Terrifying.
Like, again, especially if
you don't know where it's going, but you don't really see the process, it's all just.
Of course. And you're like, I just found this institution on the internet. I don't really know anything about them, and I've heard of them, but I'm giving them really sensitive information, right?
Yeah,
and
exactly.
They're asking me questions I don't necessarily even know the answers to. Like, do you want to trade on margin? What does that mean, right?
Yeah, exactly.
So again, all this stuff is definitely very nerve-wracking. It's very intimidating. And the more you can just immerse yourself in it and have these conversations on the front end before you really jump in with 2 feet, I think that is a really huge advantage.
Definitely.
Yeah. And then furthermore, I mean, so it's something that I think that a lot of people can use out there if they're just looking to kind of get some practice with this, right? Because when you go to first open an account, right? But then when you furthermore go to place stock trades and take the money you just put in there into this where is this place account, and you did all this, and now you're about to go buy a stock. For a lot of people, that right there is talk about palm sweating and nerve-wracking to let alone make that decision that I want to do this, but then actually go through the action of doing it. And if that is you and you've never done something like this and you want to practice, a lot of institutions do offer something called paper trading. I don't know if you're familiar with paper trading.
No, I'm not.
So paper trading essentially is where you open an account with an institution and they will give you like funny money, right? So you'll basically be given like $100,000 in fake money, and you can literally place fake trades. Like
that's incredible though.
And you can literally monitor it. It's like a real account. Like it acts like a real account in the sense that you can hold positions, you can keep it open for months and months, and you can watch the positions move up and down. And so while your own money is not at stake, you can absolutely see how your money would have moved. That we can kind
of
get
like a trial run. That's incredible.
You got it. Now, obviously, if you buy a stock and it goes up, you might be like, darn it, I should have done that in real life.
Yeah.
But you're practicing.
And it's a learning opportunity.
You're getting comfortable with this.
And kudos to you for picking a good option if that happens.
Exactly, right? So, but this is all just to continue to build those layers of comfort.
And confidence.
When you're starting out, because it is scary stuff. So let's go ahead. Do you have anything else you want to talk about for our beginners out there?
No, I think that was
spot on.
We covered all the bases.
Beautiful. So if you have any questions about that, you obviously know where to find us and you can feel free to reach out. But let's move on to our second topic. So I want to walk you through, John, the psychology of being in a trade. So we just talked about getting started, the challenges mentally of being able to get into place those trades, buy a stock, do all that stuff. So I want to take you now and kind of put you in the shoes of our viewers and walk you through a hypothetical scenario where you've just bought a stock, and now I want to walk through your brain. I kind of get a look in your brain with it. So let's not name a specific stock. And let's just say you've purchased plenty of stocks in the past. You can dig into the well in terms of your emotions and what that was like in your real experience, but you just bought a stock right out the gate. Let's say it's a growth stock. Let's say it's a stock that you are buying. It doesn't pay any dividends or anything like that. The idea is that it's going to grow for you. So you're buying a stock. It's for growth. What are generally your goals when you're buying like a growth stock? What are you hoping for? Is there like a certain percentage you're looking for, a certain timeline you're trying to hold it for? What is generally your approach when you're jumping into a trade?
Excellent question. So typically what I'm focused on anytime I'm specifically picking something like growth, and again, this is going to vary everyone depending on what you're choosing, whether it's a growth blue chip or something a little more risky. Your goals are all going to be aligned differently based on each individual trade. So
great point.
In this specific instance, we're talking about growth and long term. So normally I'm looking at anything from a 5 to in perpetuity. So however long
Oh, wow.
5 to 20 years, let's say.
Wow. Okay, so 5 years is a minimum of how long you're anticipating holding it.
Right. Now, that's not holding all of it, not necessarily. Like, there might be movements where I, sell some or buy some, but I'm getting ahead of myself. But ultimately, what I'm looking for in something, in this example, blue chip, it is something that I'm going to hold for a long time. Maybe 20 was excessive, but maybe 5, 3 to 10 years. I can't really.
So let me ask you a question. So when you're jumping into the trade, your mentality is long term.
Long term. So I'm focusing on.
But right off the rip, what would be a circumstance when you're getting into the trade? Again, the stock hasn't moved yet. What would be a circumstance where that would end earlier? You're talking about selling some of the position, or you're talking about selling possibly maybe all the position if it's merited earlier than that timeline. What would be that kind of trigger that's like, okay, is it to the downside? If it fell a certain amount, I'd be like, I'm done with this. Or if it went up a certain amount quicker than I anticipated, I would start selling some. What would be like?
It would be the latter. It would be to the point where I saw astronomical growth sooner than anticipated. That would be aligned with my goals.
Define astronomical growth.
My personal goals for this scenario would be if it basically close to doubled.
Okay.
I would not be afraid to take my wins.
Okay.
And not be overly greedy. It's hard to do that, especially when you're on an amazing winning streak, when it's rising to astronomical heights all of a sudden. Like, I just happen to pick it at the right time and it rockets up. Then I'm going to be smart and not be overly greedy. Sell some, maybe not all of it, but maybe sell enough to secure my initial investment, maybe a little profit, and then still have a little piece in there to, if it goes higher or if it goes lower, I'm not as impacted because of that.
Awesome.
Both financially and emotionally as well.
So most of your selling action would be if it goes to the upside rapidly, it sounds
correct.
Like. And it basically
if it was
really to the upside. Because again, you're talking like it would really need to be like a massive move to the upside in a short term.
In like a year to 2 years, like I see that, oh my goodness, I'm like,
okay. And I think that is, I think that's something really important for our viewers to hear, because you want to have a plan when you're going in. If you're looking to see a certain amount of gain, you definitely want to have a plan for each particular investment in terms of what that looks like. Like John just said, to him, that means the stock doubles, right? And if he's going to have a timeline of, in his head when he's getting into it, 5+ years, that makes sense, right? Because I think that over that kind of timeline, you definitely can stick it out over that timeline and wait till you get to a point where you're achieving that, right? Mm-hmm. If you are not really of the mindset where 5 years, like, what are you, crazy? That's forever. I'm not going to hold anything for 5 years, right? Maybe those goals start to come down in terms of what you're anticipating, right? But either
goals
way,
change, everybody. Like, it's not like set in stone that 5 years is going to be the case, regardless if it doubled or not. Like, again, your life changes. Things happen. Yep. You might need that money. You might need to see.
But having the plan at the front end,
having a plan in the beginning helps solidify and set you up on a path. And you do your best to maintain that path throughout the course of the term. But that doesn't mean you're set in stone. We're individuals. We can make changes, and it's okay to change. We have to be okay with making changes.
Absolutely.
It's going to happen to us no matter what. So we've got to adapt to do it and jump on, push through together.
Absolutely. And I think that because the main point there, right, is that having that goal of whether it's, I'm going to hold it for this amount of time, no matter what happens, right? Unless something crazy. Or having a percentage goal. If it goes up to this amount of profit, I'm going to sell it all or take some of my gains or whatever. Having some sort of intentional plan at the front of it, whether it's either one of the things I just said or another plan entirely, having that plan up front, hopefully what it will avoid, right, is the psychology of this stock went up to this. I told myself I would sell it if it did that. And now I'm sitting here like, oh, but what if it goes way higher and I end up making a decision to just sit in the stock and hold it and it turns into a loser, or I lose some of the gains and revert away from my goal, right? Because that is really what we're trying to avoid, is derailing your plan and changing your plans along the way and having that be a detriment to your actual long-term goals, right? Correct. Because let's talk about the flip side, right? So we've had plenty of times where you buy a stock, it starts to go up, it starts working towards your goals, sometimes pretty rapidly, and you're feeling really good about it. But then something like earnings comes out, or there's just some sort of shift, or all of a sudden what was
in
up starts
in
to
recent terms, a tariff announcement.
you name whatever you want it to be. It could be geopolitical, it could be company specific, right? But all of a sudden something happens where what was, you're up 25%, 30% on your way to your goal. Now all of a sudden pretty rapidly, that 30% gain is down to like 15% gain. So talk me through something like that. Like where are you? Because I have to imagine a lot of people out there, I've felt it before, where you're like kicking yourself. I should have sold some of that before.
Right. And I think to way that I personally mitigate that. So let's look at the latter. Let's say that I bought into that same blue chip company. And again, my goals are still intact. The goals are the same, but then it drops 10, 15, 20% in a matter of days, right? I think that already, no matter what emotion we talked about in the last podcast, emotion is always going to play a factor, but the level of the emotion can be dictated based on what your position is. So I implore, and I do this with every single one of my trades, do not sink your eggs in one basket. Because by doing small amounts and not overly putting so much skin in the game, you are preparing yourself for that potential.
Yep.
You don't want to look at it from one side and say, okay, this is the blue chip stock. It's going to go up and it's going to do what my goal is. That's not how life works. You need to be prepared. You need to be able to look at it and say, okay, you know what? I want this. This company looks like it's a little undervalued in this case. I want to buy some. Maybe I'll buy 10 shares.
Yep.
I have the capacity to buy 50 in this example, but I'm going to go with 10.
Yep.
I'm going to start with 10. It drops 15, 20 points. Now I have the ability to maybe average my costs, maybe buy 10 more or hold or whatever it may be. But the goal is still the same long term.
Yep.
And that's why, okay, I'm okay with doing this. And now I'm not kicking myself for spending all 50 shares worth of value at the moment I bought it.
Yep. Because that might be hard in the circumstance where the stock is going up, right? You really can't pick and choose like that because we don't know which way it's going to go.
Right.
And while it might be hard when the stock is going up because you bought a little bit and you're watching it go up and you're like, dang, I should have just gone harder and gone bigger on that. When it's going to the downside, you're going to be counting your lucky stripes because you are now able to not only avoid getting creamed on that stock as it's going down, other than the little position you already have, you can buy more as you go down, right? So that I kind of want to definitely kind of wrap it up here because I want to move into our last topic, leave time for that. But absolutely, I think it works both ways, right? Trying to mitigate that elation on the way up, that fear and panic on the way down. I think that biting off little chunks at a time or spitting out little chunks at a time, depending on which way you're doing it, is a really great way to go about it. I think a lot of people don't necessarily think about it that way. They think it's all or nothing. I buy this, I sell this, but it doesn't have to be that way.
Alex and I talk about this all the time, and you'll probably hear it as we continue the podcast, and I'll leave it with it. The fishnet technique. Do you want to catch one amazing fish and keep the hook on the line out there for a long time, hoping for that big catch, or would you like to throw a fishnet in and catch a multitude of fish?
Yep.
And I think that is kind of our main mission when we both invest and give advice, is that give yourself more room, put more eggs in your basket so that it gives you a diversified portfolio.
Yep. And put a plan together, have a plan on the front end.
All with goals, yes.
Try to stick that to that plan, and don't be afraid to do it in segments instead of going all or nothing as you're investing.
Yep.
Sound good?
Definitely.
All right. So let's move on to our last topic we're going to talk about here today.
The most exciting of them all.
We're just going to knock this one off the list because John cannot wait to talk about it.
I've just been annoying him too much.
Is artificial intelligence. So, John, I think we both agree that artificial intelligence stands to make a very large impact from a financial markets standpoint and investing standpoint. So let's try to keep it mostly there if we can, but talk to me about what you think about AI. Why is it so significant?
I mean, I think it's huge because, again, you're looking at something that can pull data from a multitude of sources in a ridiculous amount of time. And, I mean, for example, the blue chip stock we were just talking about, I made a position recently on a blue chip stock. I won't say the name. But to find it, I basically typed into AI and said, hey, I need just to test it. I already knew what I was looking for, but I put it in. I'm serious. I said, I'm looking for 3 top high dividend conservative blue chip stocks. And it gave me 3. One of them being one I was already anticipating and buying. So in less than 10 seconds. So for it to, for that kind of access and power, I mean, I'm talking
financial advisors out there, listen to this.
I mean, that is scary. It's scary for them because, again, it's very intuitive. I mean, you can basically ask this AI to pick things for you, and it's going to take everything we've discussed, emotion. You can put your goals in there, and it will track. It will give you
the AI
a hypothetical.
And the thing about it, right, is that makes it so crazy is that the AI is getting its information from all of the sources that you know and trust. That's why it's so effective, right? Because let's say, again, we're not going to name institutions, but let's say you have an institution you really like. It's very reasonable, stands to reason that the AI is literally getting what it's telling you from that company's website, from all the stuff that they release. So literally it is able to reference everything that's out there and spit out what it determines to be the best stuff. And it's becoming better and better at that at a pretty scary, increasingly rapid pace.
Definitely.
So, and I think we're talking about it obviously from like a financial planning specifically scope, but from an investing standpoint, a lot of these other companies out there, not just in finance, stand to see a lot of benefit from something.
Absolutely. Like it's again, we've talked about it before. It's a bittersweet thing. It's very terrifying because, again, to that front, there's a lot of companies that are going to be utilizing this, and jobs are going to get replaced. Jobs are going to be lost. And again, with the direction of technology leading the forefront of everything going forward now and into the future, unless, being outside of being in something in the tech industry, it's going to be a little bit of a challenge. I'm saying that from someone who's not in the tech industry. I'm in the travel industry, and there's AIs that put together full itineraries for people in a matter of seconds.
Yep.
To the point where, I mean, going through the process of calling in on the phone, I get it. Like, it really is upsetting, and I'm terrified of what's going to happen in 5 to 10 years in that front for my own security of job, but it's out there.
Yep.
And it's real, and it's happening, and people are using it, and it's growing, and it's just going to continue to grow. So it's very scary, and something that we definitely need to keep. Not, we can be afraid all we want, but we need to get ahead of it and realize what it is. Change is absolute. It's always going to be there, and we have to just do our best to navigate with what we've got.
Yep. And
be mindful of it.
And I think that, like, on the stock market, like, specifically from that aspect, it's definitely the potential for, you'd have to think, corporations, it's good, right? Because what it creates is jobs that took a bunch of human beings who had to be paid X amount of money per year, a pretty decent amount of time to do. Not only do they not have to pay those people to do it, but it can probably be done a lot more efficiently, faster, and more effectively in a lot of circumstances, right? Because I think of something like, I'll just give you like a very specific example, something like graphic design, right? Something like graphic design or like video editing, like that's like an industry that I could literally see just completely disappearing once the AI reached that capability where it can do it at that level that some of these really good editors can, because there might be editors out there who have the skill set to just completely put an AI to shame, but maybe not for very long, right? And the more that they do that, they're also teaching the AI how to do it better, right? So,
it's happening now. I saw a commercial recently where there was one of those random commercials for a drug ad, and it was all AI animation. So already it's just like, that's already been around, but it was like, clear as day that it was completely AI driven. And it's like, wow.
It's like inserting people.
Look at that from that perspective, even just acting.
Yeah, you don't even need actors.
You don't even need actors.
Oh my gosh.
So it's just, even though we want to talk about it from the financial and the market spectrum, it's important as a world and as the economy to see it from a full side view. And again, it's everywhere, and it's not going anywhere anytime soon.
Yep. So I think it's definitely good for the corporations. I think it stands to increase profit lines a lot when you can not pay a computer to do something they use faster than you used to have to pay someone to do slower. That sounds like profits, but it definitely makes me worry about what kind of jobs will backfill all these people who are being replaced by AI, because while yes, it stands to reason that it could increase corporate profits, people got to have money to spend and jobs in order to pay those companies for whatever they're offering.
And that regrettably is an unknown we're just going to have to wait and see.
Yep. So I definitely think it's a pretty, exciting but scary prospect. And what I would say to everybody out there is don't fight it, use it, right? Because I can speak for myself. I know you use AI a ton. You kind of introduced me to the AI that I use now. And you guys with alternative finance and the business that I'm running right now, I use AI all the time. Honestly, I don't know how I would be able to operate as a one-man show, which I am doing right now, other than you, of course, John.
Oh, thank you.
But I don't know how I would be able to do it without the use of AI because it basically is literally my assistant right now. So that's what would be my advice to everybody out there is be aware, don't fight it, use it. It's coming. Every company out there, every commercial I watch right now is toting AI, and it kind of feels like if you're not on the ship, you're about to sink. So again, don't fight it, use it, educate yourself, and as we roll forward with it, definitely stay aware of its impact on the markets and the economy and your job and all of the above. So
thank you for bringing that as a topic today. I really appreciate it.
There you go. I had to talk about AI just to appease John. He had to be done. So John,
not so fast.
What you got? John has something.
Yeah, I've got something. You sit here, you ask me all these questions, and now I got a question for you. And it's a doozy.
Is this allowed?
This is totally allowed. This is my show now. I want you to kind of take a moment and take yourself to right now and take yourself back to even 5 years ago during the pandemic. And I want to ask you, what do you, Alex, recommend, preach to friends, family, clients in times of uncertainty?
Ooh. I see where you're going with this, John, and I like it. A little mailbag potential. So I will definitely jump into that. So in short, you guys, if I am talking to a client or a family member or a friend and they are coming to me with uncertainty, which right now is at an all-time high, I would say. What I'm looking at them across the table and what I would say is, number one, trust your gut, right? You should be investing and building your portfolio based off of your beliefs and your feelings. Anybody who tells you differently, I would get a second opinion. So trust your gut, but on the flip side of that, be open-minded, right? Listen to what your people have to say, consult people, because it's very difficult not to get wrapped up in the emotion of our personal finances, looking at our situation and feeling like when something happens, the sky is falling, or conversely, when something amazing is happening, that it's just battling that emotion in there is extremely difficult to do. So yes, you should trust your gut, but when you go and consult your financial people, listen to what they have to say. Let them kind of give the other side of the coin to you, and hopefully you can land somewhere in the middle, right? Because what drives me absolutely insane is when I hear clients or people talk to me about how they went to a financial planner with a fear or a concern, and basically that planner discarded it and told them the classic cliches that time in the market is better than timing the market and all your classic stuff, and basically their concern was not heard and they were told what to do, right? I cannot stand that type of circumstance. If you feel in your gut that something is going to go a certain way, just like we were talking about before, invest in what you know, this absolutely is the same circumstance, right? You should trust your gut. Your feelings should be heard. Your portfolio should reflect what you feel. Now, you shouldn't go nuke your portfolio, and that's where when you look into the other side of things, you can kind of be able to hopefully see the other side of the coin and just make some adjustments to address what you're saying, but land in a middle ground of an area where you can trust your gut, not completely nuke your portfolio, and make adjustments to a level that you're comfortable with, right? Because realistically, anybody who tries to tell you you should do this or you should do that, they do not know what the future holds. Nobody should be definitively telling you what is going to happen and what you should do. This should be a collaboration. This should be a group discussion. So trust your gut, but be open-minded. Consult people, hopefully financial professionals. ask lots of questions, and that would be my advice to somebody during times of uncertainty.
That was so beautifully well said. You should write a book.
Maybe I will, John. And in the meantime, I loved this, John. I love this type of question, the ability to ask stuff like this. I want to open it up to all of our viewers out there. If any of you have any questions whatsoever, I would love to actually incorporate something like this into the podcast where you send those questions in. We get them answered for you. So if you have those questions, feel free to send them into any of our social medias, or you can send an email to alternativefinancellc@gmail.com. And we will see if we can start getting some of those mailbag questions into this podcast. But John, I appreciate you kind of bringing that to the surface. And in the meantime, if you don't mind coming up with questions like that, I might make you do this every week.
Oh, it's not even going to be me. It's going to just happen. And it's just going to come when you least expect it, my friend.
Oh, wow. Well, if it's every week, I'll kind of expect it.
But maybe it won't be every week.
Well, you guys, that's all we got for you this week. We appreciate you sticking with us. Feel free to subscribe to the podcast if you like this type of content. We will be back every week on Thursdays doing this for you all. So until next time, that is the We Love Money podcast brought to you by Alternative Finance. I am Alex, and this is John. Say goodbye, John.
Take care, all.
All righty, everybody. And until next time, that's Finance AF.